Hello class, my name is Sam Dykes. Today we'll be covering additional taxes. This is chapter 8, page 13 through 20 in your textbook. So what we're going to cover today, net investment income taxes, employment and self-employment taxes, FICA taxes, self-employment taxes, employee versus self-employed. Self-employed, you'd be an independent contractor. Some examples of these fields would include insurance agents, typically are 1090, and report their income as an independent contractor, almost like a sole proprietorship. So net investment income. High income taxpayers are required to pay an additional 3.8% tax on net investment income. The tax is imposed or the lesser of net income or excess modified adjusted gross income over $250,000 for married or $125,000 for single filers. This type of tax is inclusive of things such as gains. An example of this, Courtney's adjusted gross income and modified AGI is $187,000, and her investment income consists $321 taxable interest, $700 of dividends, and $5,000 of rental income. How much net investment income tax will Courtney owe to the government? The answer to this would be $0 because Courtney modified adjusted gross income is $187,000, which is less than the $200,000 threshold for the net investment income tax for a taxpayer filing as a head of household. So she'll be not subject to this tax. Employment and self-employment taxes. So these types of taxes are also known as FICA. They include Social Security tax, Medicare tax, and something referred to as additional Medicare tax. Now these taxes are typically levied on individuals still working, but for the social benefit of society. Our government sees that providing for either the disabled or retired people, for making sure they have health care, access to it, and some basic form of income is a benefit that we should strive for as a society, and these taxes help cover those payments. Social Security tax is intended to provide basic pension coverage for the retired and disabled. So this is what I was talking about earlier. Basically, if you're over the age of 62, you're allowed to claim Social Security. Social Security, if you wait for years later, your payments, monthly payments that you receive from the government actually do increase, so there's a benefit to taking it later on. While you're working, however, there is a 6.2% tax on a wage base. In 2019, this wage base is limited to $132,900. And a benefit of being an employee is that both the employee and the employer pay tax in equal proportions for this program. I'll dive into this a little bit more later on in my presentation. So an example of this, while she was attending school full-time, Ellen received $15,000 in wages working part-time for an off-campus employer during the year. How much in FICA taxes should Ellen's employer have withheld from her paycheck during the year? The answer to this is $1,148. This is derived by taking her wages, timesing it by the 6.2% Social Security tax, arriving at $930. Then you take Medicare tax, which is 1.45% times the $15,000, which gets you to $218, and just the combined amount of the $913 plus the $218 to arrive at the total tax for FICA of $1,148. Medicare tax and additional Medicare tax. Medicare is a program that the government provides basically for health insurance for retired people or people who are also disabled and have certain needs. It helps pay for the costs for qualified individuals of medical bills. There's a tax rate of 2.9% for people who are working. Additional tax of 0.9% for people who make in excess of $200,000 or $250,000 filing jointly as a wealth tax. Tax provides medical benefits for retired people and people with disabilities, as I said. So an example of how to calculate this: during 2019, Courtney received a total of $142,800 in employee compensation from EWD. Recall that the compensation consisted of $118,000 in wages, $4,800 compensation for a below market loan, and $10,000 forgiveness of debt. What is her FICA tax liability on this income? The answer is $10,311. It's taken again by her base wage, $142,000. Then you have to take into account the Social Security tax base of $132,900, which is what it's capped at, times the $132,900 by 6.2%, gets you to $8,240. And then take 1.45% for Medicare, times that by the $132,000 base, and you'll arrive at $2,701. And take the two combined, you're at $10,311. Self-employment taxes. Self-employed taxpayers must pay their entire FICA tax burden on their self-employment earnings. So as I was saying before, if you're an employee, you split your FICA taxes with your employer. So typically, if you're paying 6.2% for Social Security, your employer is also paying 6.2%. However, if you are self-employed, then you have to pay the combined total, so that'd be a 12.4% tax, in addition to your typical income taxes and state income taxes as a self-employed or independent contractor. Self-employed can take deductions, however, for the employer portion of their self-employment tax from AGI. So this can be related business expenses that they can deduct from their adjusted gross income to alleviate some of that tax burden that they face. An example of this, in 2019, Courtney received $12,800 in taxable compensation from EWD and $18,000 in self-employment income from her weekend consulting activities. What are Courtney's self-employment taxes and additional Medicare tax payable on her $18,000 of income from self-employment? Assume that Courtney's employer correctly withheld $8,240 of Social Security tax and $2,041 of Medicare tax. The answer to this is $482 for self-employed tax and $0 for Medicare. This is derived by taking Social Security wage base less employee compensation subject to Social Security tax, which is $0 for this period. Net earnings from self-employment is $16,623. Social Security portion of self-employment tax, which is $0 for this case. Medicare tax of $482. And the sum of taxpayer compensation and net earnings from self-employment, $159,423. And by doing all this, you arrive at $482, which is taking step 3, the Social Security portion, plus 4, the Medicare portion, and then step 7, less any additional taxes withheld. Since there was nothing withheld, that answer would be 0. And I'm sorry that part of the screenshot here cut off. It just did not fit quite on the slide, but I think everyone can see what's going on. Employee versus self-employed, independent contractors. So an employee, disadvantage of this is that you have less control over how and where you perform your duties. You have to report to work every single day and do essentially what is told of you by your manager. You pay only 6.2% though in Social Security taxes, subject to limits, and 1.45% for Medicare tax. However, if you are making more than $200,000 filing solely, or $250,000 filing jointly, you have to pay an additional 0.9% tax on your salary for Medicare. Obviously, this is withheld for the highest of earners to try pretty much as a wealth tax to help the wealthy contribute more to this. independent contractors, however, you have more control over how, when, and where you perform your duties. I mean, if you're an independent contractor, you do your job and you hit your production, you can essentially dictate when you're going to work. You can work Saturday, you take Monday off, doesn't matter, you have all that flexibility you need. However, they report income and expenses on a 1040C Schedule C, and they have to then by law pay both their employer portion and their portion of Social Security taxes, so that's 12.4% for them, and then the Medicare tax of 2.9%, subject to the same additional Medicare taxes as employees. Example of this: assume Courtney works an average of 40 hours per week for 50 weeks per year to earn a salary of $100,000. In addition, she receives fringe benefits, including a 5% contribution to her retirement plan, life insurance coverage, and health insurance coverage. Will Courtney be made whole in terms of her hourly rate if EWD agreed to pay her $52.50 an hour for her contract work? The answer to this is kind of convoluted and tough to derive at, but in short, the answer would be no. As an independent contractor, Courtney would need to pay nearly twice the rate of employment taxes and would be ineligible for non-taxable fringe benefits. So there's no real exact answer or science to this, depending on what deduction she could take, but because of the additional taxes, though, it is highly likely that she would not be better off as an independent contractor in this situation. So in conclusion, the government takes an additional tax for Social Security benefit of our society from working individuals. Individuals or families that make in excess of $200,000 or $250,000 respectively are responsible for an additional 0.9% Medicare tax, and employees are able to share this tax with employer, but self-employed are responsible for the entire portion. With that, these are some of the sources I use, and if anyone has any questions or comments, feel free to contact me via Harper email, and I look forward to seeing some of your guys' presentations as well. Thanks.